You've got a great product, a killer website, but that extra push to get to the next level seems just out of reach. Inventory's a bit low, marketing budget's feeling tight, and that expansion you've been dreaming of feels like a distant horizon. Sound familiar? Well, hold on a sec, because if you're a Shopify entrepreneur, you might have a secret weapon in your back pocket you haven't even considered: Shopify Capital. Now, Shopify Capital gets thrown around a lot, but what exactly is it, and more importantly, is it right for you? Today, we're diving deep to answer all your burning questions, especially the big one. What's the real cost of a Shopify Capital loan? Because let's face it, nobody wants to get stuck in a cycle of debt. So, buckle up, because by the end of this video, you'll know exactly how Shopify Capital works, the sneaky fees to watch out for, and whether it can be the fuel injection your business needs to take off. Shopify Capital, friend or foe? First things first, Shopify Capital isn't your typical loan. It's actually a hybrid between a loan and a merchant cash advance. Here's the gist. Shopify analyzes your sales history and offers you a cash advance based on your performance. You then repay a fixed amount, automatically deducted from a percentage of your daily sales. Sounds pretty straightforward, right? Well, that's the beauty of Shopify Capital. It's simple and accessible. But here's the catch. Shopify Capital doesn't advertise interest rates. Instead, they use a factor rate. This can be confusing, so let's break it down. Factor rate versus interest rate. Decoding the numbers. Traditionally, loans come with an interest rate, a percentage of the borrowed amount you pay on top of repaying the principal. The factor rate with Shopify Capital is different. It's a flat fee multiplied by the amount you borrow to determine your total repayment cost. For example, let's say you receive a $10,000 advance and your factor rate is 1.1. In this scenario, you'd actually repay $11,000, $10,000 x 1.1. Now, Shopify Capital's factor rates typically range from 1.1 to 1.13, so it's important to understand this isn't a traditional interest rate. To compare it to an interest rate, you'd need to do some additional calculations, which can get a little complex. Here's the key takeaway. The lower the factor rate, the better the deal. But remember, it's not a straight interest rate comparison. The pros and cons. Weighing your options. Alright, so we've established Shopify Capital isn't your standard loan. But before you hit that apply button, let's explore the pros and cons to see if it fits your business needs. Pros. Fast and easy. Shopify Capital boasts a quick and easy application process. Decisions are typically made within a few days, and funding can arrive in as little as 2 business days. No hard credit checks. Unlike traditional loans, Shopify Capital doesn't rely on your credit score for approval. This can be a huge benefit for young businesses or those with less than perfect credit history. Flexible repayments. Repayments are tied to your sales, so on slow days you won't have a giant payment looming. This flexibility can be a lifesaver for businesses with seasonal fluctuations. Cons. Potentially higher costs. While the factor rate might seem straightforward, it can translate to a higher effective interest rate compared to some traditional loans, especially for larger advances. Limited transparency. The lack of a clear interest rate can make it difficult to compare Shopify Capital to other financing options. Early repayment penalty. There can be penalties for repaying your advance early, which limits your flexibility. Shopify Capital offers a convenient funding option for Shopify businesses. The factor rate structure and sales-based repayment can be good for businesses with steady or growing sales. However, the potential for a high effective APR and the lack of fixed repayment terms mean it's not a perfect fit for everyone. Carefully consider your business needs and explore all your options before making a decision. With that said, thanks for watching, and until next time.